The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour on this 20th day of October. And what a day it is. Look at this. The Dow's up 109 at 23,272, all-time high. Yesterday I had a sharp pullback through the 23,052 level. And now it is 218 points higher. That is really good action. Just cannot deny it. So we want to look at this as objectively as possible. So let's go step by step. The E-mini is up 8. It should be up 12 with the Dow up 10. That's the kind of ratio I like to look for. So this is lagging. The Dow is, I've spoken about this for 2 years, saying the Dow, especially over the last year, the way I'm looking at it, is just in a perfect place for the first time in 20 years, I think. Why? Because it's leading the pack, and it's really important. This is the America leads issue that I've been speaking about for a very long, 30-something years, that at some point, America will become a leader once again, even though people don't think of it that way. I do believe this is in the cards. And this is part of what I'm thinking the Dow is representing. It's just the start. And GE is going to actually be one of, as I said to my subscribers to my opening call this morning, is GE going to be like IBM, the turnaround candidate, so that other stocks in the Dow can have a good rest as a high-level consolidation takes place and GE picks up the slack because of the optimism of a new CEO, at the same time as we've got the old one who took over when Welsh gave it up way back, I think it was in 2000, and promised to turn GE into continue GE as a leader. In fact, GE has just been plummeting and plummeting. And now it hit a low in the 22s, trading at 23.20. Maybe we'll look at it in a little while. I just want to get through these numbers. The S&P is up 8. The weekly chart, it's in leg E. The weekly chart is in leg E/B because the MACD and stochastic are still strong. I kept expecting that the daily was about to pull back just enough to see a little bit of weakening in the weekly chart, but so far this is really strong. One of the reasons at this point we have no shorts. We had just a couple of shorts with very tight stops taken out, trying to keep a core long position in the diamonds from 22,300 for some subscribers, and at the same time trying to a short term just to see if we can pick a top, so that we want a pullback that will be a buying opportunity. But if it continues like this, the next very sharp pullback could in fact be severe if a couple of things happen. So let's go through this and I'll explain what I'm looking at. In the weekly chart, leg E, in the E-mini, the E-mini 120-minute chart went to a peak C. I said it was a B, but it's actually one of our tigers who always looks at the Chapman wave intently said, no, that was a peak A back earlier on. And yes, this is a peak C in the Chapman wave. We're always looking for Ds. What does a D look like? Let me just go to this very quickly. If I can just scan across. There it is. So we try to identify the lowest, most obvious low bar and merely count each successively higher peak until you get to 4 higher peaks. You can have quite sharp pullbacks as long as you don't break the initial low bar, and as long as you're going to go to the 4th highest peak, which is led alphabetically in sequence A, B, C, D, uppercase on the way up, lowercase on the way down, just to identify a trend very quickly. And what happens is, at D, other things can happen. That's all I wanted to talk about. At D, other things can happen. Well, we went to the D yesterday, had a sharp pullback, looked like that was going to be it. Turn around and spikes to a leg E this morning. The MACD's almost negative. It is negative, in fact. The stochastic's very strong at 96. And I keep saying the on-balance volume is overbought. Overbought can stay overbought for a little while. I think it's getting close to very overbought. Now let's go to the 120-minute chart. In the Chapman wave methodology, we're looking for the D. And so far, we haven't got. I suspect by the end of the day, we're going to break 2571.75 by 25 cents to go to leg D in the E-mini. Let's see if that happens, or very close to get a peak C1, C2. The MACD is good. Stochastic's good at 84%, but not great. Let's get this away, and I want to go through these very quickly. Technical Friday, there are a lot of technical things I want to look at. Dow up 108 at 23,271. Leg F, unless it's recycled, I'm calling it F for now. The MACD is good, very strong. The stochastic at 98% is just extreme. You don't get much higher than 98%. And they broke out of the up channel resistance in the weekly chart, leg F/C, monthly chart, leg E, very, very strong. Okay, so that's that. S&P, so the key support is at 23,050 to 22,990. That's the area that needs to contain any weakness. Upside, we don't know because this is all new territory. S&P, SPX.X, here we go. S&P trading at up 9, only up 0.35%. Dow's up 0.46%. Big difference for 30 stocks as opposed to 500. We're up 9 at 25.71. This recycle, so this is now a leg D. The MACD's flattening out. Stochastics flattening, but way up at 96% on balance volume, and daily is very overbought. And the weekly chart is still extremely strong. Leg F/B, broken up channel resistance. This is very good action. Leg D in the monthly chart. So far, everything looks very good. QQQ trading at 148.84, has to go to 148.90 to break to a new high. It might get there, but it's gapped up. We'll watch to see how if this gap gets filled on Monday or Tuesday. Exactly what's happening, but it is not as technically good, but still it is strong on the daily, but not as good as the others. The weekly chart has had a much quicker A to B to C to D with sharp tests of the 9-period moving average, the black line, and the MACD by this afternoon at 4 o'clock. We'll see if the MACD is going to cross positive. If it crosses positive, then all of a sudden I have to look at this and say, okay, that is very good action in the weekly, and the monthly is only in leg C. That says it's still a D to come. That's very positive. Just quickly, the IWM and the support is at 142 to 141.70s. And the IWM at 150.13, just off the 150.68 all-time high. If it breaks to that new high, a lot of things are going on. All I can say is that the weekly chart is still extremely strong with just a little mini pullback from the single leg A, and the monthly chart is good. So the IWM has been the weakest. Now it's actually 0.57. Turns out that it's the strongest. Fascinating how the rotation goes on. Now I want to go quickly to gold. Doesn't have to be quickly. We'll go to gold. Gold is down 9 at 12.80. I was afraid of this arch formation. One of the reasons we've been long the dollar is because I said that gold can have a bounce, but I'm not sure it can have anything more than a bounce. It looked to me like the 200-period moving average in the daily at 12.74 needs to be tested a few times, but so does the 200-period simple moving average of 12.65. So we're watching this closely, looking at the dollar DXY right now. Dollar index very strong, up 62 cents at 93.75. I said just we are long from that very low of the 8th of September. That was the 35-week down move after the 35-week up move. The symmetry was just too beautiful not to ignore. I like the dollar. I think quietly it's going to move higher. I'll talk about other things. We'll talk about copper, we'll talk about bonds, we'll talk about crude oil as soon as I get back. Basil Chapman, Tiger Ignitions Hour, and I see a couple of questions in the den, which I will also get to. Oh, a lot of emails and emails. I'll be right back. Basil Chapman, Tiger Ignitions Hour, Dow's up 140, S&P's up 1.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
94.70s. I'd even say until if it can get to the 95s, it really needs to get there. And the only way it's going to get there is to turn this 93 area into tremendous support. It must not close in the 92.50s, because then I think, just a sideways consolidation before it retests the 89.57 200-period moving average in the monthly, which my thinking was that at some point it might even do that, but it could have a pretty decent bounce before then. And that's kind of what subscribers are looking for. We're looking for this to continue higher, at least for now, but until it breaks 94.27, the high closes above the high of the 6th of October. It's acting well, that's all. If you look at the euro, EUR, USD, euro-dollar currency pair, this is giving back a little more than yesterday's gain. And that's saying to me that the weekly chart is the pattern that I'm looking at. Let me just draw this in and we'll see over time if this is going to be correct. You've got a down move, and then you've got a bounce. And that bounce takes the form of an arch formation. Maybe this is a little too tiny. Let me see. Okay, yeah, no, you can see it. And what happens is this arch formation should come back to the one. It's at 1.1777. Oh, look at those sevens. Down minus 0.007. Now, what I'm looking at is the 1.1638 200-period weekly moving average. And let me just draw this little, there you are. That's what I wanted to show. Trading band I've been talking about for a while, and I think that it's going to come and test the 1.16 area. That'll be the big test for the dollar if it's even able to touch 95. What's important is the monthly chart. That's the weekly I was talking about. The monthly chart has a pattern that says, hey, I've broken out. I've done something fantastic. At a worst case basis, I should throughout going into the end of December, 1.148, let's go to 1.149, should be tremendous support if it's even going to try to get there. So in the meantime, what I'm looking at is the dollar very quietly. No one's talking about a strong dollar, but I think the dollar's moving very nicely. I just wanted to quickly see Johnson & Johnson, some of the multinationals. See, Johnson & Johnson's also broken out. Very strong legs, C, daily. I'm calling this an E in the weekly, and it's an E in the monthly. Very good action. I don't know. This is the strangest market in so many ways, because you'd think that the multinationals, especially with the dollar running now, would be starting to hurt, but they're not. All right. Now let's get on with our show, and the show is to say what's happening with crude oil. Well, crude oil is at 51.42. I still think that we're going to go to this leg D above 53.09 that was made the continuous contract above the 29th of September, that week's high. And if it's able to do that, it sort of helps the monthly, but I don't think crude oil is breaking into the 63 area this year. At this point, it just doesn't look like it, but it does say it could hold very well. It doesn't have to break down. The 48, 47 area is very strong support, and it's at 51.42 right now. So crude oil, short-term trades only. If you're looking at the bigger picture and you've been long, you can hold it long. I do expect it to pop to a leg D in the weekly chart based on the technicals. Let's go to TLT, and this is going to be so important. TLT, the reason why it's so important is this big breakdown. In a few days, it's gone from the 126s down to the 123.94 area. This is the Lehman iShares 20-year Treasury Bond ETF, trading at 123.96, down $1.35, down minus 1.08. That's a big thing. How's it impacting the yields? Well, all of a sudden, this time last week, we were looking at the yields going to the lows. This is the 30-year white, TYX. Let me just not do that. Oh, I just made a change that I didn't mean to. Yeah, let me expand. This is when the whole thing started back in 2000 and, it goes even further. I don't want to do that right now. Let me just do this. 30-year is white, 10-year T-note is brown, and the 5-year T-note yield, these are all the yields, is cyan color, the light blue. Let me expand this because we want to look at it in real time. This is a leg B. This is the first time that I've seen something occur like this that is suggesting, there were lower rates. Now we're looking at higher rates. And this is suggesting the Fed might go ahead with their implementation of higher rates. That's the 5 years gone to leg B. It's broken out. This is really close. And if anyone was long in the TLT, the question came up, would you close a long position? Let me show you something. The 10-year has just a whisker to go, 23.77, 2.377. All it has to do is go, and the 5-year kind of led on the way down. 5 years kind of leading on the way up. So all it has to do is 24.02. It hasn't got much, just one quick pop, and it starts a leg B in the weekly chart. And the 30-year at 2.901, all it has to do is get to 2.933. So my answer is yes, a flattening. I got to think about it over the weekend. I don't want to say flattening. I know I always have to go through this. It's not just a visual. You need numbers. Before I say flattening, I'm going to say, let me think a little bit more about all the implications. So this is, the whole yield curve this is a very important, and what happens is when the yield curve starts to flatten, that's where you've got to have a heads up to say, watch out, the market's getting overbought. So I don't want to even go there just yet. Let things play out a little bit more. But in the meantime, those are the levels to watch. And the question is, would you get out of the TLT if you were long? I would say that the risk now is time if it doesn't break out, because I think it's trapped in a range. I think it's been trapped in a range I've been talking about this for about, I'd say 3 and 4 months. I said yields, I think, are in a range, just as many of the commodities are, like crude oil, and until it breaks out. Now, do you want to wait until it breaks out because then the TLT give back more? I'm going to suggest, I usually say just take a little bit off. I'm going to suggest take half your TLT off right here, keep the other half and let it play out. Why? Because if it goes much higher, you'll sort of make up a little bit of what you wouldn't have because you've got half position. But if it goes down sharply from here, you've locked in something and you're able to maneuver with less weight, both WEIGHT and WAIT. So it gives you an opportunity to do these things. If you look at this is the Wood iShares Global Timber and Forestry ETF. It's gone to a new all-time high this week. It went to 69.37. This is incorrect. I'll correct that over the weekend. And the HGX, which is the Philadelphia Housing Sector Housing Index, has gone to a new recovery high, a new all-time high, if I remember correctly. I don't like, I need to do this on a monthly basis. I don't like when something breaks to a new all-time high and is still showing strength. I'm not inclined to get in the way. I'm not inclined to say, oh, double top coming. I want it to play out, and I'll explain what I'm looking at here. Look at the breakout from this multi-month. No, it's exactly a year. 1 year's worth of resistance, and it just took it out as if it's nothing. Look at that big green candle for Friday. That's today. Look at the gap that you had from this. Oh, boy. Look at this. This is Chapman wave oval pattern. This is the body. And look at this long neck here going into leg E. This makes this whole area at 308.80. It makes the 302, 301, no, 302 to 300 area very strong support. This is housing. I want to show you this chart when we get back in a moment. Look at this. 293 back in July of 2005. We were at 308. That is 15 points higher. That's not just a little break. That's a big break. I'll be back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're looking at the HGX index. This is the Philadelphia Housing Sector Index. It makes a high at 293.66 July of 2005. I remember going into it, Tom O'Brien and I, we were trying to time the short positions, and finally we got it. I think mine was Toll. I can't remember what his was, and then it started to come down. But going to the high it had a D, looked like it was starting to fail. Then it went in the monthly, then it goes to an E, and finally, boom, it comes down. And boy, did it come down from 293s to the 54s. I mean, that is a correction and a half, right? They were 88% or something. I forgot to put the percentage in. So now look, it's come all the way back in a left side, right side price time match from this low right here, the low of October the 11th, that's not an exact measured move. That's where I use the Chapman wave methodology, but I love it when it's mathematically, as the dollar was 35 weeks up and 35 weeks down. This isn't mathematically. This leads a little artistic angle to it. But we've gone there in 1, 2, 3. In 3 months, shorter time frame, broken out. And that's really important to me because the MACD is good and the stochastic's at 95%. It's going to have to take some really bad news. It might be the inflationary part of it. So I just wanted to say a close. We've still got a long time to go in October before it closes. Candle could do anything. I've seen candles change on the last day. So I'm just saying, at this point, this is a fantastic breakout. It looks more like a C than it does an F in the Chapman wave methodology. Now, I had a question, and I'm going to, before I get to the answer to this question, I want to go back to what I read the other day. Kevin had sent in an email saying on the 18th, said, as long the complex market algorithm, that was the title, as long as inflation stays low, how about you simply tell your subscribers to buy and hold for a long time? 22,800 barrier, not. 22,900 barrier, not. 23,000 barrier, obviously not. If inflation stays low, Fed stays low on rates, and market keeps chugging, sorry, but it's really that simple, Kevin. And at the time I said, that's probably the correct kind of, let's call it an axiom, a phrase, just buy and hold. And that is the case now in some of the really beaten down areas that are doing fabulously, like the XLF, why we got our bank stock, which is doing fabulously, why I wanted General Motors, which has done extremely well, why I'm mentioning now General Electric. But it's not that simple, because when I was looking at the bond chart, it hadn't broken down, but it hadn't broken up. That's number one. Yesterday, I think it was that I had a question, or the day before, when I had a question about inflation. And I said, there is inflation. There's inflation of the things you have to have, and there's the commoditization of everything that is, just about everything that is choice. So I had spoken for 2 years now that you could buy a fantastic automobile in the low 20,000s that does everything you want. Or you could spend 60,000, 80,000, even 130,000 for the same size automobile and get even more of the gadgets and everything. And that's the commoditization of this particular era. It's by choice that you, especially around here where I live, in the Boston area, you're just seeing so many Audis, so many BMWs, Lexus is almost, I mean, obviously that's not everybody, but so many more than you would anticipate, that things are actually way better. And if you're looking at the job market is saying we are having to pay up because we can't find people. And I'm not seeing just signs at CVS. I'm seeing signs for technical analysts. I'm looking technicians. I'm looking at ads that you never find in doors of places, businesses. They'd be putting it into some kind of other advertising media. They got it right there, looking for whatever it is. So I think that we're looking, and maybe it's just the Northeast, I'm not sure, but all I'm saying is, if you look, Kevin, it's not that easy now. Now I've just spoken about the yields starting to rise, and this is looking at the Fed saying, you know what, things really are improving. There's a good chance that even with a new Fed chairperson coming on, we might be obligated from what's been stated for so long that we don't want to miss this particular time to raise rates. So what I am saying is that, no, I think it's the way inflation is measured, and I've been talking about jobs and inflation as being measured to my perception, my very simple, because I'm not an economist, way of looking at things. There's been inflation for a long time, but some of it is inflation by choice and some of it is not by choice. And that's really the big issue. So I just want to read that one more time. Even though this is the 20th and that was on the 18th. Then a question about SLB, which is slob. That was not right. Darn. TYX.X. I hope I've not, thank goodness. Thought I messed up my chart. No. Okay, here we go. So SLB, I think it took a bit of a hit. If I saw, yes, a bit of a hit, down 2.21, 62.29. Schlumberger, this is that arch formation. It's a leg peak C minus in the monthly chart. Says, whoa, be careful. There's a really good chance Schlumberger is going to test 59.60, the low of January of 2016, and it's at 62.22 right now. Stay away. I wouldn't be doing this. Is unlike General Electric, which has a story. This has no story. Please be careful. So that's, and Caterpillar. I'll go to GE right in a moment, but I had a couple of questions in the den, and I said I would get to them. So Caterpillar is having a high-level consolidation. Looks like it's starting to weak technically. It's at all-time, just about at all-time highs at 131. This is really good action, flattening out. Doji candle looks like for this week. If there's a close under 129 next week, watch out. Caterpillar starts to come back to the 124s, the 9-period moving average. If there's a break to the 132.90s, 133. If it touches 133, that's really good action based on this candle that I think will be a doji close on the day. Let's just quickly do GE. GE, yeah, there's a chance. I think I'm getting here. I haven't got it yet. The day is young. Still got all the way to 4 o'clock. 122 million at this particular point. Fantastic turnaround from the low of the day, which was at 22.10. And the big, what I thought was a Chapman wave volume climax reversal. And then when I looked at it, I said, oh, later on, I said, no, big mistake. There's no news. There's no real news. This one's going to have news. So there's a chance that at 140 million on the 9th, this is the one that squeaks to slightly higher than 140 million. And we get a volume climax. We'll see if General Electric now is going to be able to keep the market up a little bit as other areas start to pull back because it's getting somewhat toppy, even though it's broken out. I still say, though, to my eye, the 23,000 level to 22,800, mark my words, over the coming 3 weeks, I think that's an area that will be tested. That's not to say we can't go higher, but my thinking is sine wave. Think sine wave over and then under, and then back again, chop, 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 and then we'll see if we're making lower highs or lower lows, or we just break out. Now, if this is within this beginning of the second part of the coda phase, if this is the breakout that I was hoping for later, then this is a breakout that's going to have very few pullbacks, and it's just going to scream and force people into the market. Just literally say, hey, you've missed a move from the 6,400s in the Dow to 23,000. Are you gonna get in? I don't know. Is this a silent phase over or at the cusp? Yeah, I think we're getting to the noisy part coming up very soon. Questions hour. I'll be right back. I've got a bunch of questions coming.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So the Nikkei just had the longest running streak since when? Since 1961. What's the wave count? So let me do this for the Nikkei. I have to do the futures. Gee, I can't remember. I don't have it from the 60s. I used to have it going back way back. So this is a leg F in the daily, but it might have recycled. I'm just for now calling it F. I don't see any reason why I should make it an F/B. Let's just call it an F. Gone above the trend line resistance, 9 period at 21,545 up at 175. If there's a break at any point in the next week below 21,235, that'll suggest that the choppy to slightly down, slightly lower highs, slightly lower lows period could be coming. Huge leg D in the weekly chart. This is tremendous action. So here's the chart, the very long-term chart goes back. You know, I wish I don't have it going back since 2006 is the earliest, but this is a breakout to a new recovery highs. Of course, it made its high in the 39,000s. I did it hand chart. In fact, I think I might have a copy of the chart right lying over there. Hand charted, and I remember when it made its high, it was in a waveform that I said, "Oh, I believe we made a serious top." And I did it based on fundamental and other aspects. Didn't trade at all, but I had mentioned to people at the time that, yeah, it looks to me like Nikkei. And then on the way down, I said, one of these days we're going to see the Dow, the price of the Dow and the price of the Nikkei cross as the Dow goes up and the Nikkei goes down. I remember those two things. Don't remember the numbers very well, but that's what I remember. Okay, yes, so this is the longest period, and it's getting toppy at a certain point. At a certain point, the stochastic at 95%. Starts to dip into the low 80s. Once it gets into the low 80s after holding, and this is for all the charts of the dailies, which I thought was about to occur, but it hasn't yet. Once they start to go from a flat 95, 96% level into the low 80s, it's pretty much done with that move. You have to wait for a brand new buy signal. We haven't quite got there yet, so let's see what happens. Next question was, let's see. Hi, Basil. Would you add GWW here? Thanks for all you do. Yeah, so let's just see. GWW. Gee, what great GW? Granger oil. So why is it that Granger oil is doing so well? Granger, I think it's Granger oil. Would you add to here? Whoa, that's a tough question. Because of the breakout, here's a stock that's showing a 208 up 3.89. You've obviously played this beautifully. I don't even want to get in the way. I am going to say stop dead at the 200 period moving average of 212 in the weekly chart. MACD and stochastic are really good. Same thing in the daily. Everything about the fast moving average of the MACD, suggests that it's going to curve over and start to come down, and the histogram will start to close in, to narrow. So I'm going to suggest to you, I can see you buy, I could say buy here 208, because from everything I'm looking at, it should go to the 216s, maybe a little higher. That would be a short-term trade, but I'm going to suggest to you, just have a little patience. See if you can get it closer to 202 to 200. And then I would have a 4-point stop, 2% or something like that. And then it should rally. It should just touch that level, 202 or 201, and then pop right back to the 206s. That'll be the best action you can see. So I hope that helps you. Next question was, Nikkei, I did that Nikkei longest streak. Caterpillar, I did Caterpillar, I did GE. Next one, Slumberjay, I did that. Oh, Bank of America, Bob wants to know BAC. 27.15, up 57 cents. Did you ask for Bank of America? Yes. Okay, so we have a position in Bank of America. It's I love the stock. It's just looking so beautiful. Gaps up to a leg E on a Friday. I'm always a little nervous when you gap up to a D, E, or F on a Friday. So I think this gap's going to be filled. When, I don't know. It's at 27.15. It looks fabulous. Weekly is in a very strong leg E. Monthly is in a very strong leg D. I love the stock. Will it pull back? We took just a little bit off in the 25.80s, and now it's even higher than that. But that was a precautionary measure, and it did pull back after that. I would love to be able to look at it again in the 25s. I wouldn't even mind paying the same price, but I would look in the 25s. So if you missed it, you could buy it here if you're looking at weekly and monthly, because the yields seem to be going higher. This is in play. Look at Goldman Sachs. Goldman Sachs, nice action today. Not great, but nice action. It's holding the 9-period moving average up 4.69 at 244.68. I think it's going to go to a leg D in the weekly chart above the 247.07 high of 3 weeks ago. If you look at, what was the question as well? C, this is very interesting. Cities not participating as well as the others. They made a peak E with a sharp down candle just the other day. From the 12th, it went to 76.14, drops down to the 71s, and now it's at 73.62. Weekly chart's not quite as positive. This is not one of my faves, and neither is Wells Fargo, WFC. Nice candle. Actually, it's almost formed an island reversal. But I think Bank of America they followed, as I understand it, they followed procedure the best of all, and you can see the way it's acting. So again, everybody talks about JP Morgan. JP Morgan is trading right now at, if I can hit the right symbols, JPM at 99.63. Oh, this is probably the leader, JP Morgan, only in leg C in the monthly. Oh, beautiful, 99.64, up $1.53. The banks are really doing well. And you can see why, and they were laggards for so long. So UAL got smacked yesterday, and now it's down. No, it's up 18 cents at 59. It made a peak D in the daily. It had a peak D from way back in May or June of this year, up in the 83s. It plummets down to the 57s, rallies up to 69, and now it's trading at 59. I wouldn't be touching it. Oh, what was the question? No question. Yeah, this is a big hit. But what's so fascinating about this, look at XAL. Made a peak E daily, so it's pulling back, hits the 9-period moving average, breaks under it, hits the 200-period moving average, spikes above. So the IYT, which is a conglomerate of different moving vehicles, this is the transportation index. So you've got the one thing that says the airlines have been hit quite hard. They're still acting quite well, but at 181.57, the iShares transportation average makes its high on the 13th, pulls back from a peak G. This should fail if I'm correct about the waveform. It should not break above 181.57. If it does, something else is happening, and if it happens next week, it's in leg D. But at this point, I think it's chopping around, but I think it's only in a range between 180.30 and 175.70. If it breaks 175, it's all over for now, and the transportation average will fall much deeper. AAL is American Airlines. That made a peak E right there, and it's pulling back. I haven't got a down arrow yet, but it is consolidating in a high-level consolidation. It actually looks a little bit better, so American Airlines is certainly better than UAL. So let's do this as we're about to break. I didn't look at copper. I wanted to look at copper, and copper is down again. It's at 2.60. I'm suggesting to you that copper's made a peak. It needs a little more time to like gain 2.8.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, folks. Let me just say that I'm going to be away next week. I'm out of town. For my subscribers to my opening call. I will do my very best to keep everything updated. I'm not sure how many charts I'll be able to get out. I work 365 days a year, and I will try to take a little bit of a break. But it's important that I get everything out for my subscribers. Our long positions are doing really nicely, but mostly we are out of the short side. Most important about this whole aspect is, for the first time in 8 years, actually it's much longer than that, you've got a president that talks about the stock market and identifies with the stock market. This is a metamorphical change. I don't know what you can call it, but this is a significant change. And as a result, a lot of focus is going to be put on the market from here going forward. Every day you're going to hear on the news, the Dow is at and people are going to be saying, "Oh, I got to get, I haven't got in, whatever it is." So this is going to be at this point, this initial stage, I call it good support now between 23,000 and 22,800. But I want to see how we close today. I want to do an analysis over the weekend. And I think I need a few days of next week to be able to see what's really working. We know financials are working here, but there's some stocks that are not doing all that well. I mean, for instance, IBB is pulling back. SMHs, you would think right now the SMH, which is trading at an all-time high, up 66 at 98.51, would I actually would have thought would be in the hundreds right now. So I'm going to be watching this. Is it starting to weaken? It's been a leader on the way up. I don't want to get in front of this. Let's see what happens. So that's what I'm looking at. So just to really sum up here, to assess where we are still looking at this the most hated bull market. I've been talking about this for years. Hated bull market in the history of the stock market. That doesn't say you can't have sudden sharp pullbacks, but it has to be news related. It's got to reverberate for days. It can't just out to overnight. The stock that don't have any news that's there. I'm watching yields. Our yields can be so that's going to be fascinating. Have a great day. Stay tuned for Steve Rhodes.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today. If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.